Today we're going to get into RWAs, real-world assets, and how these are being tokenized on-chain. So RWAs, or real-world assets, represent physical items like gold, real estate, or even intangible things like paper that's being traded, bonds, and even carbon credits. And they have huge potential over the next decade to become a multi-trillion-dollar component in the market. And also usher in decentralized finance, where centralized finance has stood for 100 years. But it also raises some questions like there's regulatory compliance, what's the feasibility of this, and is it long-term sustainable for markets? In cryptocurrency markets, identifying early trends is crucial, right? And so that's why we bring you these things here on this channel. Previously, we've seen narratives like DeFi, gaming, layer one technologies, obviously. And sometimes these are popular for a little while. We see a big pop, and then it's the tulip bubble and it crashes. And so there's a potential either we'll see, in the next year. We saw NFTs not too long ago before that collapsed. I think RWAs is probably the next wave on that. And there'll be a bunch of projects that come out saying that, we're doing this and we're tokenizing these financial products and it's on this chain and all that. Just be aware that there's going to be winners and there's going to be losers, and make sure you're doing due diligence before you're making any investments or getting behind any companies. These people are going to really bridge the gap between TradFi, or traditional finance, and DeFi, decentralized finance, where people own their own data. And what that'll do is it'll remove a lot of the fees that have been taken by the traditional financial system and give people a lot more freedom, which is what people are hoping for with this technology, right? So it'll reduce costs. And you've got people that are in the traditional sector that are already looking at this. You got Goldman Sachs, you got S&P Global, you've got Amazon, you've got NASDAQ. I mean, all of these people are looking at tokenizing different financial products, whether that's stocks or bonds or some of the other things I mentioned before. So there are some leaders that are already in the crypto space that have built things out in DeFi protocols. And I think that's really what spurred the interest of some of these enterprise solutions and investment banks to dig into the space and see if they could increase their margins and how this would affect them if they don't get ahead of the curve. Some of those people might include MakerDAO, Aave, and Centrifuge. Other people that are on Ethereum or other smart contract chains like Solana. People have been using these for a little while. I think there was some crazy people that were staking their ETH on Aave, loaning against it in USDC, staking that, and then taking that and putting that in UST. Do not advise too much leverage. That is crazy, but again, there's no protocols or safeguards here. And that's one of the other pieces of this. You need some of that stuff in place to inhibit people's ability to do that, because if you did take that type of leverage with traditional assets and we saw a downturn in markets, that could be catastrophic for... we're already in a point where there's a huge amount of leverage, but this would make it even easier for people to do that. So there's got to be some safeguards that'll be built on. So MakerDAO has been diversifying the collateral of its stablecoin DAI and USDC. They do some loans and other stuff. Will that be a security? Will it not? I don't know, but it's interesting what they've been able to accomplish with that. You got Centrifuge, which facilitates tokenization of a variety of real-world assets. And they're kind of the leader for the DeFi protocols that are using RWAs. And then other notable projects might be Goldfinch, TrueFi, and Maple Finance, which we have a partnership with at Digital Ascension Group. Our clients work with Maple Finance to be able to get leverage against their assets and then redeploy that liquidity in other places. Like I said, there's going to be a lot of challenges that come up with the tokenization of real-world assets. You've got these legacy players that are in place that... it's, going to remove some of their margins and fees. And if they aren't the ones to integrate it, then they're probably going to get left behind. So things are going to move slow until they're ready. And then bam, they'll probably get on the train and actually put out products. And I think things have been in development. We've got Ripple, but there's also the XRPL Foundation incentivizing people with grants over the next year. I think they're going to allocate another... $250 million to projects that are tokenizing real-world assets on the XRPL. Then you've got other networks like XDC. I've talked about them before. And many other foundations of networks that are going to be incentivizing people to build these real-world asset tokenization solutions and marketplaces, DeFi protocols, and dApps on their chains. there's going to be a lot of headwinds for this. It's not going to happen overnight, but it's going to provide a lot of efficiencies in markets that don't exist today. So you'll have fractionalized components of all of these financial products, real estate included in that, gold, obviously people have already tokenized that. And then stocks, you won't have to have stock splits. You'll be able to just buy 1,000th of a share. So despite the promising growth of RWAs, challenges remain. The regulatory hurdles, we're dependent on centralized entities like USDC, and the risks associated with underlying collateral. Like I said, if we saw a major downturn in markets and there was a bunch of leverage, it could cause a bunch of problems. So the integration of RWAs and DeFi presents a promising development, but faces a lot of complexity in its implementation. The future of RWAs hinges on overcoming these challenges, offering a sustainable yield-generating mechanism in DeFi and gaining long-term trust from all of the institutions and investors. I think it's pretty interesting what we're going to see over the next decade as everything is tokenized and moved onto the blockchain. If you want more information like this, subscribe, and we will see you guys on the next one.